Good morning. George Cavaligos from the floor of the CME Group for Hamzy Analytics this morning. Quick recap, an update of our last video. We had talked about the curve flattening trade ideas that we've been kind of kicking around going into the Fed meeting a couple weeks ago. Well, the Fed meeting came out pretty much as we anticipated with the Operation Twist program. The Fed started that Operation Twist program on Monday, and the curve had flattened quite a bit in anticipation of that. The favorite part of the curve, the 10s, 30s that we had talked about, has come in quite a bit. It's this morning it's trading 95, 96 basis points. And all that is the difference between the yield on the 10-year and the yield on the 30-year right now. And we anticipate that moving narrower, or what we call flattening of the yield curve. If you take a look at some of the charts that I've included, you can see that there's a bunch of old lows and some important technical support on that 10s, 30s curve, what we call the knob, down around 90, down around 85. So we're looking for a test of that over the next couple weeks. That's where I think if you've had that flattener on, you might want to take your first look at taking some profits on some of that trade. Right now we got the outright markets here, and it's been a very interesting week. Monday started the Operation Twist program where the Fed came in and was buying notes and bonds, and the market put up its intermediate highs. At that point, bonds got real close to their old high from a couple weeks ago, and the 10-year got very close too. The high in the 10-year over the last month or so has been 131.30. We got up to 131.12.5. At that point, we've found a lot of profit taking. It was almost like the rubber band had gotten too stretched here, not only in the treasuries, but also in the equity markets, and we saw quite a reversal that day. The treasuries sold off, the 10-year sold off from 131.12.5. Now, this is Wednesday morning, and we've seen the market get all the way down to 129.20, and it's actually making new lows as I speak right now. As profit taking, as the Fed is coming in today and doing their first sale. It's not something that we've seen before where the Fed is doing this selling program on the short end. So the market's nervous about that. We also have supply coming next week. The Fed's announcing, or the Treasury is announcing, the 3-year, 10-year, and 30-year auctions next week. So you've got a lot of moving targets. You got a lot of interesting and new events that the market is not used to, where we're getting sales by the Fed and purchases by the Fed at the same time, and supply coming into the market from the Treasury. We're kind of going to highlight a very important support level in the 10-year right now. If you take a look at the charts that are going to be included with the video, there's a possible consolidation pattern. Some people are looking at it and saying it's a head and shoulders top on the DEES 10-year contract. And you look at the neckline, it comes in on that chart at 129.10 to 129.12 area. The market's under some pressure. I think we're going to go test that level and see how negative the market really can get here over the next couple days. Supply starts next Tuesday. I think that's going to be kind of the make or break event for the market here. But I anticipate some further weakness in the DEES 10-year, and we really want to watch that 129.10, 129.12 area over the next couple days. The other thing I want to look for is if we get down to that area, as we've been selling off here, open interest in the 10-year has been dropping. You don't want to see a trend, a new trend start where open interest is dropping. You want to see a new trend start, a new trend develop as open interest is increasing. So we're going to kind of keep an eye on that. As prices come down, we can look at that just as a corrective pattern until we see open interest increases and confirm a new trend start possibly. We're not there yet. Keep an eye on the chat and on the website here. We'll try to keep you guys updated as much as we possibly can. Have a great day.